Hi everyone, in this video I'm going to do another installment of my Q&A with Wall Street series. In this episode I'm doing Palantir stock and the Q&A it had with Wall Street analysts on February 13th. Let's get right into it. The first question comes from one of its shareholders, Abraham, who asks, when is Palantir going to be profitable? Oh, funny you should ask, Abraham, because well, we are profitable. And that's true. Palantir, for the first time in its history, in its most recent quarter, was profitable, GAAP profitable, earnings per share of 1 penny. We know, and CEO founder Alex Karp continues, we know the products are transformational. And he goes on to say, but if it's so powerful and so good, he gets asked, why aren't you profitable? And so, because there are literally thousands and thousands of users, and at this point, countries that depend on our product for survival. So, he's going on to say, like that, oh, profits are not so important because our products are so powerful, they're so good that we need to focus on just providing our service to these people that need our services. And while that is all in good, the pushback to that would be then, are you really a business? Are you a business if you're just trying to do um, something good for society, just to do something good, then you're more like a charity, not a business. A business is in existence to earn a profit. And if you're not focused on making profits, maybe your business is not structured the way it should be. Maybe it should have been structured as a charity instead of a business. That's what, now I'm just playing devil's advocate here and saying what some shareholders or some analysts would say to push back on this, where the CEO is saying, like, oh, our product, we just need to focus on getting our product to as many people as possible. The next question comes, how does Palantir differentiate itself and compete with other AI software? And CEO Alex Karp again jumps in to say, but what's super interesting in the consumer context is the technologies we built that will allow you to do AI in private networks. Institutions and enterprises have precursor technologies that will take other companies 4 or 5 years to build. For example, how would you do AI in a regulated context? That's interesting. You can't just use, and I know Microsoft's investment in OpenAI and their product ChatGPT has been all the rage in the last month or so as its artificial intelligence generative language model has been has been gaining a lot of use. But CEO Alex Karp here correctly points out that how are you going to use this in a regulated context? You can't just use these AI models provided by, let's say, ChatGPT in your business if your business is regulated. Because how are you going to justify where these answers came from, where these solutions were generated from, where they were provided from? And he goes on to highlight a host of instances where you wouldn't be able to do that, where it would be complicated to do that, whereas Palantir delivers these types of AI solutions to their clients in a regulated environment. And I will end with this final question from Anna, not from Anna, sorry, from shareholders again, from Christopher, who asked, uh, they received a few questions about SBC and dilution. And SBC stands for share based compensation. And many tech companies, Palantir included, use stock based compensation to pay their employees. Instead of paying them in cash wages, they pay them in stock grants, stock options, and stock based compensation overall. This saves the company cash because they don't have to pay out in cash, they could pay out in stock. But what this does is dilute shareholders. So when the company does eventually turn profitable, like it did in its most recent quarter, the earnings per share are really small. And you noticed earnings per share was just 1 penny for Palantir. because it had diluted shareholders so massively over the last couple of years. But the CFO jumps in to answer the question is saying, if you go back to the quarter that we went public in Q3 of 2020, we had 849 million in SBC, and then in Q4 of 2022, we only had 129 million in SBC, stock-based compensation. So they've done an excellent job in reducing it, but overall, on the whole strategy, on the whole policy, they want to make sure that they align employees and their stockholders. So they want to pay employees in stock-based compensation so the employees feel like feel like owners, and they take ownership in their work. But they want to balance that with, of course, not diluting shareholders too much. So there you have it. There was the Q&A with Wall Street, my latest episode with Palantir stock, one of the more interesting and one of the more popular stocks in the market today. I hope you've gained some insight from this video, and I truly appreciate your viewership, and I hope you'll tune in next time. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.